All right, y'all. So it's time for life insurance video number 2. Term versus whole life. Temporary versus permanent coverage, right? So most of the time when I say the words life insurance, people are thinking about term. Term is pure insurance. Term is I pay money so that if I die, my family gets money. That's it. There's no living benefits to a term policy. There's no cash value buildup. You pay your premium to make sure if something happens to you, your family gets the money. Pure life insurance, right? And term is temporary. So I liken term to renting a home, and whole life is like buying a home, right? Because when you rent a home, generally it's temporary. You don't plan to stay there your whole life. You pay your rent every month, and once you leave, your landlord's not going to give you any rent money back, right? You didn't build any equity in the home that you were renting. And that's like term insurance, because term, they give you a temporary time frame, like 10, 20, 30 years. They're going to insure you during that time frame as long as you pay those premiums. But if you don't pass away over that time frame, obviously they're not going to give you the death benefit because no death has occurred. But you're also not going to get any of your premium dollars back, right? You didn't build any equity in your term policy. There's no living benefits. It works just like car insurance. You're paying for the what if. That's it, pure insurance, right? That's term. Term is good. It's really affordable, right? In the previous video, I talked about how I paid $35 a month for $1 million. That was term, right? Temporary coverage. It was a 10-year term. But what I did with that term was I converted it to whole life insurance. I converted it to permanent policies, right? And whole life, I liken it to buying a home, because when you buy a home, you get a mortgage. The more you pay into your mortgage, the more equity you're building in your home. And you can access that equity through a home equity loan or line of credit. Right? And the reason I compare that to whole life is because whole life builds up cash value. So rather than the premium being only to pay for the cost of the insurance, a portion of that premium is paying for the death benefit. The rest is getting dumped into a separate account that builds up cash value. And you have access to that cash value while you're alive. That's why they call it life insurance, guys, not death insurance, right? There are living benefits to it. So when this first came out, rich people were dumping millions of dollars into whole life. They would do low death benefits, dump millions of dollars into these policies because they weren't using it for insurance. They were simply using it as a tax shelter because the cash value is accessible to you tax-free. That's why they call it the rich man's Roth. Look it up, the rich man's Roth. Cash value life insurance. If you make over 140 grand, you can't use a Roth IRA, you become ineligible, and you can't put more than $6,000 a year into a Roth. So people who want to save more than 6 grand, who make too much money for a Roth, or who just want a level of liquidity, right? Because you can access the cash value before 60 without penalty, unlike a lot of these other retirement accounts where you have to wait till you're 60, right? So personally, all of my investments are wrapped inside of life insurance because I know if I can wrap my investments in a policy, if I can have the same investments that were in a Roth or a 401k inside of a cash value policy, and that makes sure that one, if I want access to my money, I can access it without being taxed and penalized, right? I don't have to partner with the government to save my money. Another topic there. 2, it will take, if something happens to me, they're going to take my money and leverage it and give my family 2, 3, 4, 5, whatever multiple, and leave it to my family tax-free. Of course I'm going to do that. Of course, and not everybody is as passionate as building generational wealth as I am, but if you are, then that's a really, really good way to start building up assets that you can use for your lifetime, but you can also leverage whatever you don't use while you're alive to leave a larger inheritance down tax-free, right? So the last statistic I heard was that like 70-80% of Fortune 500 CEOs own a cash value life insurance policy because they don't have the ability to do the Roth. They can do Roth conversions, but if they want to build up some more tax-free money, they turn to that cash value policy, right? So just understanding the difference between term and whole life is extremely important. I wanted to provide this quick, I say quick, it's been 5 minutes. I want to provide this, quick education for you guys. And as always, if you have questions, you want to go in more in depth, let me know. But really just wanted to make sure you have a full, a high level understanding of the difference between term and whole life, because so many people have no idea of those living benefits. So hope this was beneficial. As always, I'm definitely going to be going more in the weeds, more in depth with this concept, talking about the different types of permanent policies and kind of the history behind them. But I hope this added value. I love you guys. and look forward to the next video as always.